Move straight on to have a look at the day's business news for you on the programme. Anka Ula is joining us here on set from the business. Anka, the global market sell-off, we've been talking about it for a couple of days now. It's carrying on, isn't it?
Yeah, that's right. It's carrying on and it's spreading. Investors initially took that trade truce between the United States and China as a relief. But the optimism quickly gave way to confusion and skepticism that any concrete solution would be found, especially after Donald Trump tweeted that he was a tariff man. Well, the latest from Beijing, China's Commerce Ministry said that it was confident a deal would be struck within the 90-day negotiating period. Trump responded shortly after, saying that there would be a real deal or no deal at all, in which case it's back to major tariffs. Now, that confusion took a toll on Wall Street during yesterday's session, and it spread globally. The spotlight is, of course, on Chinese markets and how they're reacting to that. Let's take a look at Asian markets. As you can see, the Hong Kong Hang Seng down more than 1.5%. Shanghai's Composite down 0.6%. But we're also seeing a more broad sell-off here in the region. Tokyo's Nikkei closing in the red 2 days in a row. Seoul's Kospi also down about 0.6%. Banking and financial stocks sold off following Wall Street's lead yesterday. Here in Europe, it was red across the board at open, with every major index more than 1% down. Automakers taking a hit. That's weighing on the DAX. It was down 1.25%. There's still concern over Italy's new budget proposal, as well as any new Brexit developments happening in the next few days. Now, Japan has cleared the way for its largest ever foreign corporate acquisition. Shareholders at Takeda Pharmaceutical overwhelmingly approved a $59 billion takeover of London-listed Shire on Wednesday. Takeda will now become one of the top 10 pharma firms in the world. Shares, however, only had modest gains from their 25% drop since March. Investors are concerned over the debt-ridden company's ability to cope with high financing costs and challenges of integration. Shire's shares, however, saw a jump 3.5% at open here in Europe. German car bosses flew to Washington on Tuesday to meet with U.S. officials and try to ease the threat of tariffs on European cars. Giants like Volkswagen and Daimler hope that by reaffirming commitments to U.S. investments, Washington would think about backing off those tariffs. Catherine Bennett tells us more.
A meeting that was successful, for now. Executives from German automakers Daimler, BMW and Volkswagen sat down with White House officials in an attempt to head off future trade conflicts. US President Donald Trump has repeatedly threatened to impose tariffs of 25% on imported cars and car parts if European car makers don't up their production in the United States. Volkswagen has been mulling a strategic partnership with US carmaker Ford to secure its position in the US and protect it from potential tariffs.
What we are here to do is to present our investment plans for the United States, which I think are quite convincing. So I think we made a big step forward to avoid the tariffs.
BMW's biggest plant globally is in South Carolina, where it employs around 10,000 people. It's considering opening up a new US plant. Brussels and the White House reached a truce on trade in July, agreeing to hold off on further tariffs. German Chancellor Angela Merkel took pains to emphasize that the unorthodox meeting was not about trade, as it's up to Europe to negotiate trade deals on behalf of Germany.
This is not about any trade issues. Rather, these trade issues are unanimously decided by the European Commission for all member states.
The meeting didn't necessarily broach any new manufacturing plans. Most of the investments discussed were already in the pipeline. But German automakers took the opportunity to remind Trump of their stakes in the US market.
Well, finally, as public support grows for the Yellow Vest protest movement here in France, demand for the reflective traffic vests that gave the movement its name has also been swelling. More and more demonstrators and sympathizers are buying these vests online on websites like Amazon. Now, Amazon uses a strategy called dynamic pricing to increase the price when there's higher demand. A report from French media BFM TV found that prices for the vests have jumped an average of 22% since those protests started. Since some of the most popular models have seen their prices jump nearly 50%. So a bit ironic that Amazon is taking advantage of this movement to raise their prices.
It is an automatic thing, isn't it? But yeah, you're quite right. I love Santa and the dog in their yellow vests as well. My wife's got one, but I think that's because she travels home on her bike late at night. Different reason. Thanks a lot, Anka. We're Business on France 24. Dipty's here.